Have you wanted to start investing, but you don't know which account you should open first? Should it be a Roth IRA or a regular brokerage account? Well, guess what? You're not alone. In today's video, we're going to help you decide which one you should open up first in order to grow your wealth. Welcome to the Wealth Twins Show. So let's jump into it. Nicole, if it comes down to a Roth IRA or a brokerage account, what's your opinion that a beginner should start using?
Well, I mean, to tell you the truth, they're both great accounts, right? But because they're so similar, they also have some differences that you need to know about before you actually decide which one you're going to invest in.
Yep.
Now, for example, some similarities. They're both after tax money accounts, meaning that you put after tax dollars in the accounts to actually fund them. And they're both very flexible in what you can actually invest in when it comes to it. So that means you can invest in stocks in both the Roth IRA, you can and also the brokerage, you can also invest in ETFs, index funds. There's a huge amount of, and even bonds. There's a lot of different securities that you can invest in both accounts, which is also great. Now, there are some limitations, and I think the first limitation I would have to give to the Roth IRA. This is an account that's different from a brokerage account because it serves a different purpose. It serves as another retirement account. Now, it being a retirement account, one limitation is exactly how much you can actually put into that account on a yearly basis. Now, the figure actually changes year to year, but as of now, we're talking about 2024, 2025. You can only put in $7,000 a year if you're individual, okay? And also if you're under 50. After 50, you can actually put in more for catch-up contributions, which is around $8,000. Now, Nadia, what do you think? What other limitations would you say there is in terms of a Roth IRA account?
I think when it comes to the Roth IRA, like you said, they're both great accounts, especially when you want flexibility in terms of what you're going to be investing in. And that's way more than you would be able to invest in if you're looking at your job's retirement account. But if I'm looking at limitations when it comes to a Roth, I would say it's when you can actually withdraw the money from that account. Now, when you go to withdraw the money from a Roth IRA, you have to have that account open at least 5 years before you start taking money from the withdrawals. Now, this is different from the money you contribute. When you have a Roth IRA, the money that you're contributing into that account, you could take it out whenever. But if you're looking at the earnings on your money in that account and you want to start taking money out that you earned on that money that you put into that account, you have to wait at least 5 years after that account's been open. And if it's not, you're going to get hit with penalties. And you have to be at least 59 and a half before you can take that money out without getting hit with any taxes or penalties, right? Now, there's some exceptions when you can take that money out that has been earned without getting any penalties. And that's like if you're a first time home buyer, let's say you became permanently disabled, or you're taking it out for I guess a sort of some medical expenses that go above your I think it was 7.5 of your income. And you can also take it out for some special school like higher education needs. But I would think that's the only other limitation is when can you take the money out that you actually earned on this without getting hit hard with taxes and penalties.
Oh, I can think of some other limitations when it comes to the Roth. So
Okay.
one is who exactly can actually have a Roth,
Oh,
right?
true.
It's a great account, but not everyone is eligible to get a Roth.
That is true.
One, you have to have earned income to be able to open up a Roth account. So that means you can't just give someone a gift and put it into and try to fund a Roth IRA. You have to have earned income. And Social Security and I think there's some others that don't actually qualify for earned income. Okay, so you have to have earned income. That's one. Then two, you have to make, if you're an individual, to be safe, less than $150,000 a year in order to be eligible to open up a Roth IRA. Now, when it comes to a taxable brokerage account, those limitations aren't there. Anyone can open up a taxable brokerage account if you're over the age of 18. And there's no limitation as to how much you can actually put in that account on a yearly basis. And there's also no limitation as when you could take that money out. There's some tax liabilities that come with the earnings that you actually have when you have a brokerage account, and the earnings that you make on the account, there's some tax liabilities. And depending how long you actually had those instruments in your account, the taxes change, they go lower. But those is only some of the limitations that you don't have when it comes to a brokerage account that you have to be aware of when you're actually dealing with a Roth IRA account.
Yeah, I will just add you can open up a Roth IRA if you make over 150,000. You won't be able to contribute the full amount to that. And I think it stops around 160,000 odd. And when you're a married couple, it's like 236,000. You can't even put any money in. Now let's look at some of the limitation when it comes to a brokerage account. Now, like we said, they're both after tax accounts. So when we say after tax, it means you're putting in money that's already been taxed, right? So you don't have to worry about paying taxes on the money that you put in. But the difference is with a brokerage account, whatever your earnings are, whatever you're getting paid dividends are, or whatever you sell and you actually make money on, you will be taxed at the income rate that you're currently paying, or you're currently paying based on how much money you're making, right? That's one of the limitations. My thing is, if you hold something for over a year, that income tax rate or the capital gains tax, what it's called, actually goes down. So I think it maxes out at like 20%, and that's if you're making, I think, over 400,000. So many people are going to be paying around 15% when it comes to being taxed on the capital gains in a brokerage account. So when you're looking at it that way, that's one of the limitations, because you will be taxed on that money and you put in money that was already taxed. But you have the flexibility to take that money out or sell anything you want at any time in that account. What do you think, Nicole?
Yeah, I think this is where the Roth shines, that the money you put in and the earnings you make on it, they grow tax free. And included in those earnings is dividends.
Yeah.
And I know you mentioned it just a minute ago, but just in case for anyone that doesn't know, what exactly are dividends? We call that the passive income in the stock market,
Yep.
because these are payments that companies give you if you're invested in them, just for simply holding the investment, for holding the stock, the ETFs. It's not you having to do anything like buying and selling. Once you buy a dividend company, and you can receive those dividends. So you could consider it passive income in the stock market. And it's actually the easiest way to make passive income. Okay. Now that's great because the dividends growing in that account, you're not taxed on it. Whereas in a taxable brokerage account, you're taxed every year on the dividends that you make. So I definitely believe that that is something that's a pro for the Roth IRA accounts. Now, Nadia said when it comes to the brokerage account, yes, you have a lot of flexibility. There's no time limit and no limit as to how much you can put in that account, and also when you can take it out. So if you need that flexibility and you're not trying to just save for retirement, but maybe you're saving for like a brand new house or a brand new car, or maybe a nice vacation, a taxable brokerage account, if you're willing just to pay the little bit of tax that you make on it, and this is only on the gains that you make, then that's something that you have to look into.
Yeah, I would think if you want to categorize them, one would be investing for a longer term basis versus one that you're using for shorter term or more immediate needs. And it's something you want more flexibility to do with the money that you're making in that account. That's how I would look at it, right?
Well, you can
So
also use a brokerage account for long term as well, and
you
you can
can
use it as a supercharge, because
savings
if you
account.
only invest in your retirement accounts, you do have a cap on all of them, right?
Exactly.
But the taxable brokerage account allows you to supercharge your long term savings as well.
Yeah, and just in case we didn't say it, there's no income limit and there's no contribution limit when it comes to a brokerage account. Okay. You can put as much money as you want into it and you can invest in what you want, but you also can. It doesn't matter how much money you make. Okay. So this is an account that you have the most flexibility. Doesn't matter what income you make per year. Doesn't matter if you're a married couple that makes over the income limits when it comes to any of your retirement accounts. That doesn't matter when it comes to a brokerage account. Now, the thing is, a lot of people have questions about these accounts and like where would they open them? You can open a brokerage, like a taxable brokerage account and a Roth IRA at the same broker. Okay, it doesn't have to be anything special. So they will just send you the paperwork. You tell them what kind of account you want to open up, and they will give you the paperwork to open that particular account. So if you're looking at Charles Schwab or Fidelity and you've seen our other videos, you can open up either one of these accounts at those particular brokers and have no problem with it.
Now, with that, then I think we should like tell people, how do we feel? Should you have a Roth IRA or should you have a taxable brokerage account? I
Yep.
think if we didn't make it pretty clear, we believe if you can and you're eligible, then you should have both. Because there's no reason why you should just have a retirement account that has a limitation on it, even though it's a fantastic account, when there's another option that you can put on top of it and layer it, and it can be used for more flexibility, and it can also be able to use, you can use it to supercharge your retirement. So the thing to concentrate on is how can we get as much money as we can to save for the future, So we should be using all the options available to us.
Yeah, I would agree with that. Now, if you're running into the problem when you're saying, look, this is the money I have left over from my paycheck that I can invest in order to pick the two, think about what you want to use that money for and what you want to grow that money for. If it's for something long term, then you may want to look into funding your Roth IRA first. If it's something that you want to save money for more near future and save that you don't want to have any penalties and be able to take that money in and out, then maybe you want to look into a taxable brokerage account, okay? That's your choice. But look at it, there's different tax implications, but it's pretty easy to invest in both. It's pretty easy to open both. And like Nicole said, if you have the option to open both, I think you should open both, okay?
Yeah. On top of that, like Nadia said, you can open it at the same broker, but you also don't have to. That's also another
True.
flexibility with having a brokerage, a taxable brokerage account. You don't have to use the same company you have your Roth IRA with. So you can get more flexibility and more options that way as well.
I
So
agree.
with that, I hope you enjoyed the video. If you did, please give this video a thumbs up, share with someone you care about, and also, if you like this type of content that we're making and you want to know more of our insights when it comes to money management or investing, then please join our newsletters called the Wealth Pack, and the link is down in the description. We share all our insights when it comes to these topics, and it gives you an idea exactly how we feel about both short-term and long-term savings needs so that we can build wealth, and we want to share that information with you. So
Yep.
until the next time, we'll see you.
We'll see you guys.